Welcome back to Investors Point of View. Hello to all our community members, students, and everyone tuning in. Today, we're embarking on a deep dive into the fiscal year 2025 results for CleanSpark, ticker CLSK. And this isn't just another earnings call breakdown. We're looking at a complete financial reversal and a massive strategic pivot. Our goal here is to really simplify how they went from a company many had written off to what looks like a future-focused infrastructure platform. I remember last year the sentiment was so different. Now it's a whole new story. So let's get right into that financial swing. What do the hard numbers actually look like?
It was, and I'm quoting the CEO here, a transformative year. The numbers, they absolutely back that up.
Yep.
So in fiscal year 2024, the company posted a net loss of around $126 million.
A pretty big loss.
A very big loss. But for FY 2025, they pulled off a complete reversal. We're talking a net income of $364.5 million. Yeah, that's about $1.25 per basic share. That kind of that shows serious operating leverage.
And operating leverage just means their revenue grew way faster than their costs.
Exactly, dramatically outpacing their cost structure.
And the revenue growth itself was phenomenal. It didn't just grow, it doubled. It hit $766.3 million, which is a 102% increase year over year.
And that operational excellence, you really see it in the profitability metrics. Adjusted EBITDA.
Right, the core profitability.
Precisely. It skyrocketed from about $246 million to over $823 million. That tells you the core business is just churning out cash now.
Okay, so that success lays the foundation. Let's pivot to the capital strategy. They hit huge operational milestones, right? Hash rate over 50 exahashes, 1.2 billion in Bitcoin on the books. But how did they fund the next step?
That's the critical question, and this is where their management really shined. They intentionally avoided traditional equity fundraising.
So no ATM facility, no selling shares directly into the market and diluting everyone.
Exactly, they avoided that. Instead, they used what they call accretive capital market tools.
Which brings us to the centerpiece of that strategy, I assume, the big convertible debt deal.
The very big one, a landmark $1.15 billion, 0% convertible transaction.
0%. That sounds like free money, but what makes that so strategically brilliant for what they're trying to do next?
Well, think about it. It provides a massive amount of capital, long-term capital right now. You need that to build out large-scale data centers.
Sure, that infrastructure isn't cheap.
Not at all. And because it's 0%, there are no interest payments draining their cash flow. The dilution only happens much, much later, and only if the stock hits certain prices.
So they secured the bridge funding for this big AI pivot without hurting the balance sheet today.
That's it in a nutshell. It's smart capital stewardship. You even see it in little things like their treasury desk generating an extra, $9.7 million in premiums last year?
So this smart, cheap money is fueling a whole new direction. What does this mean for the company's identity? It feels like they're moving beyond just Bitcoin.
Oh, absolutely. The strategy is officially shifting. They're moving from being a pure-play Bitcoin mining company, which was their focus through 2025, to becoming an energy and infrastructure compute platform.
An infrastructure platform. The target there has to be AI, right? High-performance computing or HPC workloads.
That's the prize. And they're already laying the groundwork. They grew their contracted power capacity by 43%. They now own a portfolio of more than 1.3 gigawatts of power and data centers across the U.S.
So they're leveraging what they already have, the power contracts, the physical locations.
Right. The goal is to use their power expertise and that data center footprint to become a leader in this broader compute market. It diversifies their revenue away from just, volatile crypto mining into the high-demand world of AI and enterprise computing.
Given the significant pivot towards AI, funded by that incredible capital market maneuvering, which factor, the massive increase in revenue or the strategic move to diversify compute services, do you believe will have the biggest impact on the company's performance in fiscal year 2026? Write your opinions in the comments section below. Thanks for being here. For more financial points of view, you are more than welcome to subscribe to our channel and give it a thumbs up. See you on the next one.